Hi guys, my name is Francis and you're welcome to my channel, and in today's episode I'm going to teach you a simple ICT order block trading strategy that you can employ for your day trading, and you're going to make a lot of money this year 2024 once you master any of the strategies I'm going to be teaching you on this channel. They're going to be very simple and easy to apply. Alright, so in today's lesson we're going to be learning about the order block and how to use the order block to execute your trade entry, or whether you're going to buy any asset or the currency that you like to trade. We are going to be using Euro USD to show you this strategy in today's lesson. We're going to be dwelling on Euro USD. So quickly, what is an order block? There are actually two types of order block. Number one, we have a bullish order block and a bearish order block. All right, so we are going to learn about the bullish and the bearish order block, and we're going to look at the criteria for executing a trade on an order block, either a bullish or a bearish order block. All right, so we have two types of order block. It's either a bullish order block or a bearish order block. So what is a bullish order block? A bullish order block, simply put, is the last sell candle that was traded through by a buy candle. All right, so the last sell candle in a bearish trend, let's say for example price has been selling, then this is the last sell candle that was traded to the upside by an engulfing buy candle, the last sell candle that was engulfed by a buy candle. All right, that is what a bullish order block is. And how do we outline the order block? We outline the last sell candle, the high to the low of the last sell candle before the buy candle that engulfed the previous sell candle here. That is going to be our order block. So institutions would usually leave their orders, because from the word order block, it means that there are orders residing at that specific level, either a buy order or a sell order. So usually at an order block we have at a bullish order block we have buy orders residing at the bullish order block, and at a bearish order block we have sell orders residing at a bearish order block. Okay, then the higher the time frame you're identifying an order block, the more the validity of that order block. Secondly, an order block that has a fair value gap attached to it is a high probability order block. Okay, so two things you should take notes: the higher the time frame you are looking at the order block, the more the validity of that order block. And another block that has a fair value gap, all right, is a high probability order block. So this is a bullish order block. So usually the institutions will create this order block in a sell trend. They will create another block and start to trade to the upside. All right, they are going to come back to that very order block here to pick up their orders before they continue that buy move. Okay, then we go to the next one. What is a bearish order block? A bearish order block is the last buy candle in a bullish trend that was engulfed to the opposite direction by a sell candle. You see that? What validates an order block is that engulfing candle that engulfs either the buy or sell candle. So in this case we have the last buy candle that was engulfed to the downside by a bearish candle. All right, you need to see a clear impulsive candle engulfing the previous candle before we can say that this is another block. Okay, so this is a bearish order block because we see a sell candle engulfing the last buy candle here. Then we mark between the low to the high of that very bullish candle. That will be our bearish order block. So institutions will leave their orders here because they want to revisit that level to pick up their order before they continue their bearish move. Okay, so usually when they are creating this level, the retail trader is not seeing this level. All right, so those traders who execute trades very early are going to be trapped, and they are going to clear all of their stops, and they are going to pick up their orders at the order block before they trade downward. So we are going to learn how to take a trade, a day trade, on an order block. All right, so our rule is simple today. The first is that you need to identify the higher time frame market structure on the daily time frame, and we need to come down to the 1 hour time frame and look for our order block around the Asian session box. All right, that means we are going to be doing this in the London and New York session. Remember, in the London and the New York session. So if you are confused about knowing when the London session is, the London session is usually between 2 to 5 a.m. New York time. You should convert that to your local time, depends on the country you are watching this video from. Just go to your app store and download a mobile app called Time Buddy. So once you download that Time Buddy app, then you're going to convert the standard 2 to 5 a.m. New York time to your local time, and you're going to know when the London session starts. In your region, in Nigeria, right now, it's between the hours of 8 a.m. GMT plus 1 to around the 11 a.m. GMT plus 1. That's the London session. And the New York session is also around the 7 to 10 a.m. New York time. That's the standard time. So you should convert that to your local time. It's going to be around the 1 p.m. GMT plus 1 to around 4 p.m. GMT plus 1. That's the New York session. So we are going to be looking for that order block after the Asian session. All right, that means we are going to be doing this in London, because after Asian session, the next session is London session and the next is New York session. So we are going to be looking for order block on the 1 hour time frame in London and the New York session. All right, so the first is you go down to your daily time frame and identify a clear market structure of the daily time frame, because the higher time frames will always, remember, the higher time frames will always supersede the lower time frame. So that's why you need to make sure that your analysis is in line with the higher time frame overall institutional order flow or market structure. Clearly, you can see from the daily time frame of Euro USD that right now we are in a bullish market structure. Why? Because we see the Euro USD forming higher high, higher low. You can see that clear, higher high, higher low, higher high, higher low, higher high, higher low. What are we expecting? Higher high to take out the previous high, trade into the previous buy side liquidity pool there also, because that will be the draw liquidity residing above this high. It's called the buy side liquidity pool, and above that high too, it's called the buy side liquidity pool. All right, so we know that we are bullish. Market structure is bullish right now. For every clear bullish expansion in a bullish market structure, we expect to see a bearish retracement. All right, bullish expansion, bearish retracement. We're expecting the next bullish expansion to happen, all right, into these liquidity levels that we have outlined. So we are currently bullish on the Euro USD. Okay, so let's go down to the 1 hour time frame. I'm just going to show you examples where you would have taken a trade on the Euro USD, and of course market structure is fractal. That means if you see on the daily time frame market structure bullish and you're expecting a retracement on the daily, on the 1 hour time frame it's gonna be lower low, lower high, lower low, lower high, lower low. Even though on the daily time frame it's just one retracement you are seeing, on the lower time frame like the 1 hour, it's going to create a clear market structure for a sell. However, that's just a retracement on the daily. So you should watch my video on market structure right on this channel. Just go search about the video where I talk about market structure, and you're going to clearly learn about market structure. Today's emphasis, my emphasis is on the order block trading strategy. Okay, so we see that we are that bullish. So let's see right here, because this was a clear daily time frame higher high. Let me show you higher high, higher low, and higher high. So how are we going to know that that's the higher low here? It's done. Once we see a shift of market structure on the 1 hour, we know that this is over and market is going to start going up, higher high, higher low. on the 1 hour to create the daily time frame higher low as well. All right, so you can see that this was a retracement, price sold, but we are in a bullish market structure. And then right here, after price traded into this what we call flip zone right here, okay, the previous old high there, the previous old high right here, you see that this was the last time a sell happened before that shift, and then price mitigated all of that, finding price is finding support at that level, and price creates a shift of market structure right here. When price closed above, look at what happened here. Price created a low, then price created a lower high, then swing low, you can see, failing to break the previous low, and price created a shift of market structure. Okay, right here you have a shift of market structure, bullish. That means we are going to start buying, Euro USD. All right, we are going to start buying Euro USD. Okay, so how are we going to buy Euro USD? Simple. We are going to identify the Asian session, and we are going to be looking for a clear bullish order block from Asian session. And in London session, a bullish order block is supposed to support bullish prices. All right, a bearish order block is supposed to also support bearish prices. So since the market structure of the daily is bullish, and we have a confirmation using this shift of market structure on the 1 hour, that means bullish order blocks are supposed to hold price to continue buying. We are going to be buying at bullish order blocks. All right, but to be specific, we are going to be buying at the other blocks around the Asian session, in London, or in New York session. All right, get this clearly. We are going to be buying at another block around the Asian session, in London, or in New York session. Okay, so to make it more specific, let me so how do you get your Asian section box? It's simple. Just go to your indicator section of your trading view, click here, just click here and search Asian session range or Asian range and kill zone. And once you do that, then the indicator here it's going to appear. All right, it's going to appear. Then go to settings, and in settings make sure you tick display Asian range. It's going to come up, and you can also display the London Open and the New York Open. Right, we can change the color of the New York Open to, let's change it to something like this, and let's say that it's something like this. All right, so that's it. So we're going to be buying in London and New York. So this is it. You can see that this was the order block. Remember, we mentioned that in another block we need to see a clear impulsive candles that close above or engulf the previous candle. So you can see that this was the last sell candle before all of this impulsive candle. This is another technicality in using order block. Sometimes you see more than one candle engulfing the previous candle and consecutively, almost immediately. That 2 candles or 3 candles should be classified as one candle. So this is 1, 2 candle, you can see that engulf the last sell candle here. All of these 2 candles should be classified as one candle. All right, so that means this would be the bullish order block. This would be the bullish order block. When are we buying this? Look at the time we are buying this. It's between the New York session. This happened around the New York session. When is the London session? London is between 8 a.m. GMT plus 1 to 11 a.m. GMT plus 1. You can see that price didn't go back to this order block. Most people will have been worried, why are we not buying this? We are patiently waiting for price to get back to this level before we start to buy. And this happened around what time? Around the New York session. Okay, you can see around 2 p.m. GMT plus 1. This was when this happened and we're good to buy. We're good to buy. So when you are buying at that order block, where is your stop loss? Your stop loss is below the low of the other block candle. All right, you can see that the last sell candle that was engulfed by 2 consecutive candles, that is a bullish order block. The low of the bullish order block is your stop loss. So you're going to be buying from this level right here. You're going to be buying, and your stop loss is below the low of the bullish order block right here. All right, that's where you're going to be buying. So where are you buying into? You are buying into the next drawn liquidity. Where's the next drawn liquidity? You can see very clearly that you have an old high here. Then you have the next old high here, the external range liquidity. This is for those of you doing swing trading, you target that level. For those of you doing day trading, you target just the next old high that was left untraded to this one here. So as you can see, price clearly traded into that level the following day. Look at what happened. Price expanded, went into the next Asian session, and what happened the next day? Look at what happened. Let's take this for a minute. Look at what happened here. Price created the Asian session, and in London session, remember, we are looking for clean bullish order blocks, just clean bullish order blocks. Look at what happened. Price created another bullish order block right here. Do you see that? The last sell candle here that was engulfed by, you can see this, that was engulfed by the bullish candle here. This is the second technicality of using an order block as well. All right. When using an order block, make sure you are using the candle with the largest body. Take note of these things I'm saying, because these are the things that makes the use of order block dynamic. Most traders just think order block is just any other sell or buy candle. It's not just any other buy or sell candle. You must know the technicalities of ruling out the ones that are not order blocks, and I'm saying it right here. When picking out order blocks, we pick out the candles also with the largest body. I won't be picking this one because this is just wicks. This is the candle with the largest body right here that was engulfed by a buy candle. Last sell, last buy here. That's the bullish order block. So we are outlining that candle right here. You see that? What happened? Price traded back into the other block, and this happened in the New York session as well, and that's where we're going to be buying. Where are we buying to? We are buying to the next draw on liquidity. I'm sure that happened around the news, and look how price traded swiftly. You can see price traded swiftly above the high here, above the relative equal highs. You can see them right here, the relative equal high. That will be your profit target, because all these levels are drawn liquidity. You see relative equal high here, relative equal high here, all those are liquidity level. Then the next day again, Asian session. Remember, we are looking for clean bullish order blocks to buy prices. Look at what happened here. We have sell candle. You can see this sell candle that was traded through by 1, 2, 3, 4 consecutive candles. So we are going to classify all that candles as one, and this sell candle has the largest body, so that's our bullish order block. Okay, so look what happened here in this trading day during the London session, or New York session, sorry. You can see 2 p.m. GMT +1, price traded down into that bullish order block. You can see from the high to the low of the bullish order block, price traded down, and that will be your trade entry for a day trader. For a day trader, that will be your trade entry, and you're good to go targeting the next drawn liquidity. I'll be targeting the relative equal highs here, and ultimately that old high. So if this was your target, profit has been met. If this was your target, unfortunately, profit was not hit. Sometimes it's okay to miss these trades, but you should be taking partials at this level. You should be taking partials. If you did not take partials, you should be at break even. Look at what happened. Price still traded to retest the same order block for the second time, but this happened during the Asian session, so this wouldn't have made sense to you. All right, guys, so you should take out time to practice this. Check this out on your chart, do your back test and hindsight study, and I'd like to know your feedback in the comment section. I'd like to know how you are looking at this, and don't forget to like this video, share this video, and let me see your comments in the comment section. And make sure you follow me on this channel for more educational videos on trading and trading related ideas. Until next time, I wish you good luck, good trading, stay safe.